Hello, trading has closed on the 24th of April, 2023. As always, we'll do our disclaimer. We'll go over our calls and we'll make some predictions. This is my trading plan for tomorrow, which is the 25th of April, 2023. Remember, I can be wrong. Trade at your own risk. I'd like to thank the person who went to Amazon and gave my book a 5-star review. That helps. I'd like to thank the people who click like. I'd like to thank the people who tell me online how much they appreciate what I do. I'm very grateful to you. Now this is a thing I would not let pass anyone by. Trading Pro Rod David is offering 2 days of free access to his trading room tomorrow and the day after. It's the 25th and 26th of April, 2023. YouTube gives me trouble when I try to put a link in, so I have to type this out. And that's about all you'll have to do. No registration, no credit card. 7 a.m. Eastern Daylight Time is his strategy planner. 9:15 he does the pre-open update. You can watch a real pro trade 2 days free. You see if his style is helpful to you. This is a great opportunity. I wouldn't let it pass anyone by. Well, let's go over what we said. We look for the pattern at the early high, which is this, and tomorrow should also have the early high. We said we didn't gap up, we should trade lower, which we did trade lower. We didn't close lower, we closed essentially unchanged. But we did trade lower. Now Thursday's pattern we said here was pretty negative, and we said Friday, because we had mixed signals, we should have a gap and a prompt move outside the day's range. Well, Friday, there was no gap. So we said we should close a little change Friday, which we did, and we said a big move the next day. Well, today was the next day, and we didn't have a big move. We closed essentially unchanged again. So you could say neither one of those things happened. But actually, whether we close a little change 1 day or 2 days or 100 days doesn't make any difference to me. Still look for a big move the next day. And by closing the little change, I mean 0.25% or less. So as far as I'm concerned, that's still the active pattern. Now, it doesn't work every time, and if it fails, it fails. It's not perfect. But I still think once we have a move more than 0.25%, it's going to be a much more than 0.25%. It should be a big move. Just a reminder, I might not post every day this week, personal business. Well, during the day, MEJT said this rally was a false move, wouldn't stick, the price would retrace. Ed said this drop was a false move, and that we'd retrace back into this area, which we did, and that's resistance. In the afternoon, it said ultimately we trade higher. We did. It also says we'll trade lower under this line. That gives us a target, 41.2558. If we don't gap up smartly, that's my call for tomorrow. Here's Tom DeMark's TDST line. We've been stalling there for a month. That doesn't mean you won't break through, but as of right now, we're stalling right where his system says you're supposed to stall. The idea here is at some point we're going to complete this wave, have one more drop, and that'll complete this blue ABC. That's the idea. Let's see what's going on here. We are hugging the lower line of this channel. Usually the more times you hit it, the longer you hug it, the greater the chance you break through on the downside. There are two things that could make that hit some turbulence in the road. One is this pattern normally is an early high and a late low, which we did, but the late low is usually way down here. And when you don't have a late low way down here, it should lead to higher prices, even if you don't close higher. Now the catch is what counts isn't this close, but tomorrow's open. If we open down here, that pattern's killed. Or if we gap and trade under here, promptly that pattern's killed. But for right now, it's a positive pattern. The other thing, it is possible to call this a cup with a downsloping handle. And once you break through this line, you're supposed to retrace it in its entirety, targeting overtaking this high. I'm not really totally confident of that because of this line. If you drop and just go straight down like this, that's supposed to be unstable once you break through this. But this might put the kibosh on the whole idea. Since it isn't straight down, has a pullback first, it's just not as clear as I would like. So let's go back to our wave count. So we had a possible ABC with a top last week. And measuring from the top, it's possible to count 5 waves down, 1, 2, 3, 4, 5, with an A, ABC for a B, and C exactly equal to A. So we have an A, B, C with C equal to A. Doesn't mean it's the only count, but it's a valid count. And if we start to drop right from the open tomorrow, particularly if we gap down smartly, if that happens, everything is in place for a wave 3 down. If it doesn't happen, then something else is going on. And that we're not going to know until tomorrow. Tuesday's pattern has a really high. We could still gap down. Signals are mixed. It's positive. Today's normally bearish pattern. Didn't hit a low in the final hour of trading. Maintained at tomorrow's open. This should lead to higher prices, regardless of where we close. Gapping and promptly undercutting today's low would invalidate the signal. It's negative. We have a lower target. Last Thursday's pattern still hasn't delivered on its promise to give us lower prices, and 2 days of closing essentially unchanged doesn't change anything, the way I do things. The ideal situation Tuesday would be for us to gap and promptly undercut today's low, and preferably Friday's low as well. So if that happens, we should begin a sizable drop. And if it doesn't happen, I don't really have a good trading plan for now. I'll probably stay flat. It's a pattern with the early high, but I'm hoping we get a big gap down, or at least a big move down right at the open. We can get someone else's opinion free starting 7 a.m. tomorrow morning. And that is today's call.